Hello, everyone, and welcome to this special edition. It's a special series that the Economic Times is doing along with IBM. It's called Reshape Tomorrow. Now, tomorrow is the focus of everyone's life. So, our life, your life, in fact, the lives of companies. We're always trying to look forward, trying to predict what's going to come up ahead and how we can manage that better. And of course, the COVID-19 pandemic has shown us that as much as we want to predict, sometimes there is such a spanner in the work that comes that we're left kind of a bit lost, but we recover as we've all seen ourselves, companies, the economy, everybody is getting back on track. This very special series, like the Economic Times and IBM is doing, called Reshape Tomorrow, we look at different sectors, we look at the impact of COVID on it, and also most importantly, we look at the way ahead. This is a very special panel today. We're looking at insurance 2020 and beyond, what's next. And I have a stellar star cast, the who's who of the insurance industry. Allow me to quickly introduce them before we begin our proceedings. We have Anamika Roy Rashtrawar. She's the MD and CEO of IFFCO Tokio General Insurance. Mahesh Balasubramanian, he's the MD and CEO at Kotak Mahindra General Insurance. Mr. Prashant Tripathy, MD and CEO at Max Life Insurance. Tarun, Chugh, MD and CEO at Bajaj Allianz Life Insurance. Anuj, Mathur, MD and CEO at Canara, HSBC, Oriental Bank of Commerce Life Insurance. And we also have with us Sandip Patel, MD of IBM India and South Asia. Thank you, Mang. Thank you, gentlemen, for joining us today. Before we kickstart things, I just wanted to invite Sandip. Sandip, if you could just give us the opening note for the session today.
Great. Well, first of all, thank you. Thank you everyone for joining, and thank you to my fellow panelists. Clearly a great set of leaders to talk about the industry. Let me put some context in terms of, I think, where I see the industry going, and having lived in the industry for a while, have a little bit of a perspective. But I think with COVID, where that has taken us, I think it's starting to pivot the industry, and some of the paradigms itself tend to be shifting. And I think that it informs us in terms of where the industry trends are moving. So I think that particularly with COVID, whilst digitization was in fact driving a lot of where the industry was going, I think with COVID, technology has clearly become, in many respects, a sutradhar that has sort of kept businesses and people thriving and going, right? And connectivity. But it's also accelerated the pace of digitization. I think whether we like it or not, we are operating now very much in a digital world and a digital economy. And I think this has specific implications, I think, across any form of business, but more importantly, I think in financial services and insurance and others, it is clearly, it's requiring the industry to sort of really accelerate the pace of change and digital transformation. Second, I think there is this is a phenomenon that has been happening for a while, but insurance traditionally has been a data-rich, very data-centric kind of industry. We've loved our data. We've loved to store data. We've loved to collect data because we believe that there is, latent value in it, and it does have value. But actually, if we think about how risk is getting shaped with respect to data sets, we now have access, and this is exponentially growing, right? We have new data sets that are now becoming available. And many of those data sets, they not only are new, that are now being able to be read by our computers, etc., but they also, the nature of the data is very different. It tends to lose relevance. Much of it tends to lose relevance within a few nanoseconds after it's created, be it sensor data, be it data related to the weather. But all of these actually have implications in terms of how we think about and how we manage risk. And then the third thing that is happening is with digitization and data sets, right? We are starting to see digital ecosystems form around us, whether we like it or not, but that is bringing into the system non-traditional competitors, as well as others who are coming to create new revenue pools within these ecosystems that are forming, whether it be serving a white space that is created or which consumers are looking for, etc. So with all of these, I think there are three fundamental paradigm shifts that I see that are shifting in the insurance industry. One, I think we will start to see a certain segment of our business change from managing the risk of loss to managing the risk of prevention. And this is now possible, and particularly, I think, a lot more in general insurance, but even in life insurance, where we can actually start to move people towards, better prevention, etc. There are implications to how we think about writing and managing risk, right? So it's more about managing the risk of prevention versus managing the risk of loss, and it has implications in some respects to a second paradigm shift, which is how do we think about products? So as we think about products and services, clearly the kinds of data sets and others that are available, the fact that some of the fundamental paradigms of insurance are changing, it requires us to think about products differently, which could include writing products that can cover at the point of risk, for example. How do we create services that in fact drive prevention services at scale? For example, and I'll as we get into the conversation, I'll share some examples on that. How do we write products that are more leveraging data sets around IoT and others with more inclination, where you are actually partnering with the insured to manage certain parts of risk that don't come onto your balance sheet, right? And then the third domain, which I think is becoming more and more relevant, is how do you start partnering with customers, both in terms of creating a differentiated service experience, as well as a different set of integrated offerings where you can make it a financial marketplace that manages health, wealth, protection, all of the above, including ancillary services. So there's a whole different way in which you create a services experience. So it's more about a services experience as opposed to them thinking about, here's the big bad insurer that we only call when we have a claim, right? So the mindset and perception changes. But also it allows us to start thinking about new service models that we can create that actually add to that kind of an experience that we build out, whether it is with other ecosystem partners, or where we start to build that into our vertical supply chains in some respects. So these are some of the fundamental paradigm shifts that I do see changing. This also has significant implications in terms of how we think about emerging insurtechs and others that are coming into the system, and how we in fact partner with them to build some of these ecosystems that enable us to create a much better environment of trust and transparency. I mean, trust has always been an issue in this industry. We see that with customers, we see that in surveys and so on. But I think we now have an opportunity with the digitization, with some of the data sets that are available, and with, I think, expectations of the new digital consumer, right, to change that mindset and create just a differentiated trust and transparent mindset across the industry and across our customers. So let me just pause there. A lot to talk about, and love to hear thoughts, experiences, and share examples that each of us are going through as we go through the shift in the industry as well.
Fantastic. Thank you so much, Sandip, for kicking that off. Before I head into our panel, just quickly wanted to share a survey that we did as part of this series. This is something that we've done with the agency, with this survey agency called Kantar. We've all heard of them. It's a CXO survey that was done, and the aim was to look at some of the challenges posed by COVID-19. It's been done across sectors, but of course, the data that I'll be sharing right now is only for the BFSI sector. It was looked at as the BFSI sector on a whole, not just insurance. But I'm sure it'll be quite interesting, and we'd love to discuss some of these points on the way ahead. Well, there have been about 310 respondents across 230 companies, but specifically BFSI, 66 respondents. Here's the breakup: 17% from insurance, 33% from banking, and 50% from the financial markets. These were the respondents. As you can see, 14% were CXO, MD, board members, and senior leaders in management were about 33%. So of the respondents that will be sharing their feedback about. So here's this one I think is quite an interesting one, because 56% of the respondents thought that the BFSI sector was performing very well or even excellent before COVID-19 hit us. So the idea was to look at Q3 of last year, so October, November, December of 2019. But 70% of organizations mentioned that their business has seen a negative impact due to COVID-19. So there's the concern is there that people feel that business in the financial services overall has been impacted. Here's some of the top concerns that companies, BFSI companies, have had. Here's the important one. 55% have think that cybersecurity, especially because, yeah, I mean, we are all working from home. That's how files are now being transferred online as opposed to being in office in the secured servers. Data access from home was another concern. And of course, yes, the important companies are worried about employee health and remote workforce, how to manage all of them. But here is the concern action mismatch. So while we saw earlier that there was so much concern around cybersecurity and about the files of customers, data privacy, etc., the major focus has been on organizations have been taking into concern, looking at the concerns of engaging customers virtually, which is about 58%. 56% has been ensuring IT resiliency, and cybersecurity is 47% of the. So that has been a bit of a mismatch between what the respondents told us from the survey. Here's the actions taken by the organization to address their key concerns during the crisis. As you can see, meetings on digital platforms. We were just discussing this before the start of this, that yes, that's how most of the companies, I mean, I think all companies have gone. Providing IT essentials to employees, employee health and location tracking, again, really important. But as you move down, cybersecurity is coming lower, and strengthened cybersecurity 55%, and conducted cybersecurity awareness training is 41%. So that's just been a bit of a mismatch there. 27% of the respondents agree that their organization has very well managed the crisis due to its resilient business model. That's good. 27% have said that. And 53% agree that technology adoption will be fast-tracked in their organization. So there is a focus, a shift, or emphasis on the importance of technology that can help move their organization ahead. Degree of importance of technology integration, security and privacy, of course, 58%, remote workforce, scalable infrastructure, cash flow management, 43%, process automation, 38%. So again, the top concerns are around security, privacy, and about ensuring that the remote workforce works well. And that's where they feel that technology would play a key role in that. Now, this is a really important one, and this is something that I will be referring to in our panel discussion. So it's a clear break halfway between both, where 50% are saying that October to December, so Q3 of this financial year, will be better than Q3 of the last financial year. While, of course, the other 50% are expecting a much lower performance or a lower performance. So this should be an interesting topic that we will be getting deeper into in our conversation. So that was just a quick summary of the survey that we've done with Kantar. And with that, let's get right back into our conversation. And we're talking, like I said, today about Insurance 2020 and beyond, and what next. And I just want to open this up to the floor. So any of the CEOs from the insurance companies that want to tell us importantly, how is the insurance industry doing right now? Because we saw the graph and it said that people are worried, but my sense is that it's not. I mean, the industry is, the numbers are up in the industry, of course, and you're seeing a lot of awareness and awareness amongst the customers. So I just want to open it up to the floor. Whoever wants to take that question first.
Okay, so I'll take that.
Yes, Mr. Tripathy.
So, I was just going through the pie chart, and I was just wondering in my head who would have responded to those questions. And I'm sure my fellow colleagues in the industry, life insurance industry, would agree that we wouldn't fall in the red category because honestly, life insurance is doing quite well, and every month things have improved. So much so that I kind of track monthly data, and for towards August or September, I think industry started to move slowly in the positive zone, and many of the companies are recording growth, including our own company. So it began with a tough situation in the month of April or May, but increasingly every month situation has improved. And my sense is that quarter three for the 2020 should be better than quarter three of 2019. My sense is that the industry will record growth over last year, because that's the trend that I've seen at least in last 45 to 60 days. Having said that, it is a bit of a setback because the industry was growing about 18-20% year on year. So with a steep trajectory of 18-20% growth, perhaps you would start to outlook something which is a small single digit kind of a number, which is a bit of a setback, but it is not something which is unmanageable. It is not something which is as bad as some of the other sectors have seen. With that, I think there's a lot of discussion around why life insurance is doing okay or better. I think 2 or 3 factors. A, with the way life insurance is seen, it is a very foundational, fundamental industry. And in times like these, people do think about life insurance because we are outlooking a life-threatening pandemic. So we have noticed that there is a lot more demand for protection side of business, and that's really causing some bit of growth. But also a lot of credit actually to all my industry peers as well as regulator for facilitating with agility, handling the situation, working towards adoption and penetration of digital solutions, and very, very fast response. I was amazed with the way the entire industry responded without any exception. And that also has been a very strong supply side strength that the industry has seen for us to do better. So just to summarize, we are doing increasingly better. My sense is that things will start to look up from here on. I think quite well prepared. Plus, of course, the sector that we operate in has been helpful because of inherent customer demand.
Fantastic. Thank you for that, Mr. Tripathi. I'll come to Mr. Balasubramanian to just weigh in from the general insurance part. And of course, with health insurance, with Corona coverage coming in. Also, just a reminder on the survey, because that survey was across the BFSI sector. So only 17% of those respondents were from insurance. There were about 50% from financial services and the balance 33. So yeah, it's a mixed. So it's not directly insurance, but I take your point on that, Mr. Tripathi. Mr. Balasubramanian, sir, your point.
Yeah. So life and life insurance has been different from life and general insurance over the last 6 months. Before that, on the BFSI segment, having spent a lot of my life in BFSI before coming into insurance, I think the lending businesses are the ones which are, gone through the pain because of moratorium and the lack of ability to lend. Though the liquidity has been high in the system, inability to lend because you don't know whether you're going to get your money back. So I think the moratorium brought in a lot of uncertainty. So BFSI on the lending side has had a difficult time, whether it is NBFCs or banks or public sector banks or private sector banks. On the insurance side, I think Prashant spoke about the life insurance industry. In general insurance industry, it's been a mixed bag. I can't say that everything has been great. The response of the industry has been superb. I think everybody has been up and running in COVID times. Claim settlement efficiencies, policy issuance efficiencies, all that, I think all the players have responded pretty well. But on the demand side, we are linked to the underlying economy because we insure assets in the economy, whether it is lives or assets. And if the economy is struggling, it will have an impact on general insurance. Let me quickly take the top 3 segments and give you a summary. Overall, I think the industry, private sector players, the total industry has grown about 1.9% in the first 6 months. The general insurers have degrown by 0.9%. Health insurance probably by about 30% growth. And the balance has come from the specialized insurers. So net half-yearly mark, we're at about 1.9% positive. But if I break it up into segments, the fire segment has seen pretty good growth. Not because suddenly more projects have come. In fact, we all know the investment climate in this country has been very difficult and very challenging over the last cycle. But the price increases have resulted in growth. The reinsurers had asked all the insurers to increase price because the discounts were not sustainable in the marketplace. So I think some semblance of sanity was restored to the pricing. And thereafter, the growth has come largely on the backdrop of not increased demand, but better price realization or fair price realization. Let me say that. It's not that we have been charging higher, but it's just the fair price has been charged this time for a change. Motor insurance degrew by about 30%. No marks for guessing why. Underlying demand has been muted. We have been having probably 2 years of bad cycle in the motor business with things getting absolutely accentuated because of COVID. Let's hope and see how Diwali is. Manufacturers have reported a higher dealer sales, manufacturer to dealer billing last month. So we are hoping that that will spread into the market and insurers will see some growth on the motor side in the second half. Health insurance has been a big gainer in this entire process. Industry grew by about 60%. Some of us have been growing health insurance at about 100%. So again, in terms of players, some large players have struggled. Crop insurance has been cyclical. Some months industry has grown because crop has come in that month. Some months degrowth has happened, but crop by and large has been flat. But from a performance-wise, it's a story where some insurance companies have done well. The smaller ones like us, we are probably among the top 2-3 growing companies because we got our health segment right, because we were able to forge ahead on health. We reduced our dependency on motor consciously over the last 2 years. Large players have struggled because if you're largely OEM dependent, motor dependent, you are bound to struggle. So it's been a mixed bag for the industry. But let me say that in terms of response to policyholders for claim settlement or policy issuance, I think the industry has done a tremendous job in the last 6 months.
Fantastic.
Maybe Anamika can fill in what I left out.
I was just going to go on to her only, but ma'am, while you're answering, your thoughts on the same question, I would, when we were, so Anamika ma'am and we were having a chat about this yesterday, and she brought out this very interesting line, and she said, and this is, I clearly remember this from our conversation, and she's like, is health the new motor? So that is, Anamika ma'am, I'd like you to come in and tell us your thoughts on both these points, just taking ahead from what Mr. Balasubramanian said, and also, is health the new motor?
Sumiit, call me Mahesh, now don't make me older than what I am here.
Okay, Mahesh, sure.
Okay, I will take this conversation forward from where Mahesh has left. And as he said, it has been a mixed bag for us, not too bad, not too good. I would say, given the circumstances, we haven't done too badly as an industry. And I must also praise the regulator for its agility in actually coping up with all the changes that we required, which I think Prashant had mentioned earlier. These two are very important points that we should note, and the viewers must also observe. Because we are always known to be a legacy kind of an industry. We don't know how to move faster like the IBMs of the world or whatever, but it's not true this time. This time, I think the insurance industry really moved very fast, be it the way we settled our claims, be it the way we responded to the Corona Kavach and the Corona policies, and everything that is good about it, the industry today. The claims were settled. Yes, we have come back to the pre-COVID times right now. I must tell this to everyone. The claims have started picking up. Our Corona claims have also started coming, and we have a market share of 4%. So it's about 4% share of the claims that we have. You asked me a question, is health the new motor? Yes, it is. When just about a couple of years back, motor used to be 50% of the industry's premium. Today, this has been changing. And I would reiterate what Mahesh said. We have seen a very significant growth in health insurance. And one of the reasons why you see some bit of growth that is coming up as like the green shoots that we see is basically from the health. One good news is in the month of October, we are seeing a lot of traction in the motor business as well. The private car business is doing fairly well. That is again, you see this little virus has shaken up a lot of pundits. Now, we talk so much about shared mobility. अब ऐसा होगा, अब वो ऐसा होगा, अब वो सारा चला गया. अब we just come back to individual mobility once again. So if you see the sale of cars in the segment that it is primarily the small cars which are going, and you will see some. Of course, this morning's Mint said something about retail, two-wheeler retailers not doing well, but our data shows just the opposite. We are doing very good two-wheeler business. Tractors. What a magnificent sale we've had in tractors. So motor is picking up, although we thought that health could actually bypass the motor numbers. But today I stand to say that they will be both equal. Now, why would health become the new motor? See, the motor business somewhat is regulated to an extent by the third-party component of the premium. And the law says nobody can drive a vehicle on a public road till you have a valid insurance for your third-party liabilities. So this was one area that picked or helped or nudged motor business to grow. Now, what about health? Somebody mentioned that there is a fear of this purchase. Yes, there was a fear of what? The fear of settling the claims. The fear of not getting the due service that the policy would actually want to consume.
Right.
And this had actually prevented a lot of penetration into health. But we do see that there are a lot of new and unique customers who are buying a policy for the first time. Once this corona actually got into the mind of people, forget about being infected. It is more to say that if something like this happens, what will happen? Now, why suddenly this health is becoming so popular? Two reasons. One reason is that earlier, government also provided some health cover to some section of society. There were the group health policies were provided to a lot of employees. And there were others who thought, okay, hum baad mein le lenge, abhi nahi lenge. These were the kind of sentiments. This time, the uncertainty of the income of the future and saying that where do I go with my health bills in case my job, my salary is reduced to half or I don't even have a job, what do I do? And suddenly we found that a lot of people, at least the Corona Kavach and the Corona Raksha policy, I think within the few, almost 1 month or so of its launch, 1 crore policies got sold.
Yeah.
And there was hardly much that we did in terms of advertisement. It was just on the website. So this probably will be a trend that will continue. The fear of uncertainty of income, the flattening of the interest curve, and also the rising bills. As you know, the average claim size today, because of this COVID impact, is now almost becoming very high. What we used to pay an X amount, today we are paying 2x times of that. The only reason is a lot of precautions have been taken in the hospitals and the claim sizes are rising. Hence, I am convinced that this line of business is here to grow, and it will grow quite differently than the way we saw. Maybe we'll wait for your next questions. The others get a chance to speak first.
Yes, one small comment on what Anamika said.
Mahesh.
Anamika, I only hope that in terms of margins, it doesn't go the motorway.
Yeah, but today it looks like that.
Okay, that is definitely an important concern and a big topic for discussion. So we'll get to that in a bit. I just want to bring in Mr. Mathur in before I head to Mr. Chugh. Mr. Mathur, one other, like Mr. Tripathy was saying, term life insurance is picked up. It's been seen good numbers during this during the lockdown period. What are your thoughts on this, and what are some of the trends that you have seen in these last 6-7 months?
Sure. Yeah. No, thanks, Sumiit. So I would concur with what Prashant said. I think whether we call it as a bad outcome or good outcome of COVID, for sure awareness has gone up. And what that has resulted into is that there is demand for certain segments. So the only change which I would like to kind of mention is that overall we see insurance not having kind of achieved 10-15% of growth rate, but in certain segments the growth is fantastic. So for example, protection, particularly online protection, I think that has taken up very well. And in our business, we have seen almost 100% growth in number of policies in the online protection segment. Similarly, with interest rates also heading southwards, what we have also seen is that there is demand for guaranteed products. So if I look at the insurance, life insurance market, these are the two segments which have actually kind of done really well. And obviously, because of the uncertainty which Anamika talked about, I think people are looking for buying more and more insurance. Earlier, it was not never used to be on priority list of any customer. Now it is becoming kind of a priority for people. And despite disposable income going down, still people are actually buying insurance. So we are also witnessing overall increase. But as I said, there are certain segments which are growing faster than the other segments. So I think protection is one, then guaranteed products another. We have also seen surge in the pension segment. And in fact, this segment used to be a very small proportion of the industry, of the business a few years back, but suddenly it has gone up. And again, it is linked to the longevity. It is linked to the investment returns which people can get. It is linked to the kind of savings which people want to make for future. So we have seen actually good growth in these particular segments. So clearly, I think if I look at overall BFSI, within BFSI, I think insurance is a beneficiary of whatever has happened. In terms of growth rate, yes, I think the growth rate which we are witnessing right now, had this been a normal year, I think growth rate would have been far higher. As Prashant also mentioned, the industry was looking at 15 to 20% kind of growth rate, which is currently muted. But if I have to look at how Q1 was with Q2, and I think when you did survey, that must be either later part of Q1 or maybe early Q2, the sentiments which came out in your survey is possibly because I think of the timing. And what we are now seeing is that Q2 is definitely better than Q1. All of us were taken by surprise during the peak of insurance period, which is March. So it was sudden kind of, in fact, this kind of BCP, no one anticipated that one fine day there'll be lockdown and you'll have to shut down the business face to face. But I think over a period of time, over next few months, I think all of us have understood. And I think the digital assets are actually doing a good job. If I have to coin the term, I think we are not just now the insurance companies, we are insurtech companies. So technology is playing a big role in facilitating business. And Sandip also talked about that in the beginning in terms of digital ecosystem. So I think that has got created. And this is the new normal. So I think people have now learned to live this way. And I think the insurance sector overall, if I look at, is going to be a beneficiary of it. It will take time. So it will not happen overnight. But the way things have recovered in Q2 vis-a-vis Q1 gives me that hope that Q3 and particularly Q4 should be really good for the industry.
That's a very well used term. I think insurtech is very true. And I mean, it's always been, I mean, even before the lockdown, people used to say that every business is a digital business or a technology business. I want to come first to Tarun and then I'll come to Sandip. Tarun, now, one thing is, obviously we know every business and your business and all the other businesses have been using more of technology now with the lockdown. But in life insurance, the concern is it's usually a face-to-face interaction when you're trying to talk to the customer about the importance of life insurance, and more importantly, the right amount. Because India, yes, we are underinsured, we are uninsured, but we're also underinsured. So at Bajaj Allianz Life, how have you kind of used technology to help keep this customer interaction better, or kind of be in touch with your sales force that's spread out all across the country?
Right. No, that's a very good question, Sumiit. And I think the one big thing that has changed is how we are selling insurance and how customers are oriented to buy it as well. Now, you're right, absolutely. There was a time when we could never imagine that we could sell life insurance online. Everything had to be through an advisor, who was sitting next to you, taking a piece of paper and, filling up things for you. All that is now out of the window, right? Now, if somebody was to come to your house and carry a piece of paper, you'd possibly tell the person to sit a mile away from you. So there is this huge change, and we were all gripped with this, and we were all, of course, including my colleagues in the industry, were worried, how are we going to cope up with this change? And that honestly was the one big block that we all had to handle. So I think the few changes have happened where the customer itself has been insisting on taking on technology. So, I mean, most CEOs have been chasing their distribution teams to start using technology, but here, they have kind of just gulped it up themselves. And no matter how much you can give them, they've been taking it up. At Bajaj Allianz, what we have done is we focused on safe customer-facing technologies. I'll give you an example. If you had wanted to buy, let's say, life insurance from me, I would come to your house, ring a bell, come and sit with you on your drawing room, and maybe do a need analysis and then sell something to you. Today, like you can conduct this session on Zoom on a screen-to-screen basis. Today, I am selling life insurance on a screen-to-screen basis. So I can be, yeah.
No, just so yeah, exactly. How's the pickup been on that? How have people accepted it? Because I mean, whatever it is digital.
So see, we always used to think that customers would not pick up, new technology, and customer-facing technology is always a problem. And I think this is all in our heads. One fine evening, and everybody's suddenly become technology denizens. So we've got this screen-to-screen app where I can, which we launched about 45 days back, and I've had about 50,000 sessions organized, and we've got stupendous feedback from customers. You can actually, I can share the screen with you of my own Instab, which is an insurance tablet. The screen, you will be able to see the screen. I can fill the form in front of you. You can see how it's getting filled. If Sumiit is spelled with 2 O's or 1 U, you can figure out to correct it. The transparency has gone up significantly. The belief, I think Sandip mentioned that sometimes people don't believe on life insurance. The trust factor is what technology is helping us bring in. And particularly for us, the screen-to-screen sharing has been a phenomenal bit which we've been able to use and take benefit of.
So I'll bring Sandip in on this. Sandip, very important point that Tarun said, that the trust factor, I mean, because life insurance selling is about trust. You're paying today for something that you won't be living to take it, or, you'll be using it many, many decades later. But now in this change in scenario, how do you see technology that's being used to strengthen this relationship and enhance the quality of the customer interactions? What's your take on that?
Yes, so I think I'll just pick up on the points that I think Tarun was making, because very relevant. I think the fact that we do have a very digitally savvy customer base, which people have suddenly, and I think people were always there. I think the pandemic has actually just accelerated that whole, and people now, it's almost like necessity is a mother of invention. So people have actually jumped into it because they've needed to, and they're doing it. But I'll make a couple of other points and just pick up on what Tarun was saying. I think the convergence of technologies, right? It's changed both the buyer and seller behavior, and insurance industry therefore hasn't been very different, right? So and as Tarun said, we are using technology to redefine the industry itself and transforming the customer experience. Now, the point I will make is that this issue of trust, I think the whole area of using technology to buy and sell, that's one part of the equation where you show them exactly what is being filled out and so on. I also believe that we have a tremendous opportunity to use data, artificial intelligence, augmented intelligence, whatever you may call it, to actually demystify the products that we are selling to the insured. And I've experienced this myself, when I was in the industry, trying to sort of sell health coverage to folks who didn't even know exactly what they were buying, right? So when they were getting into it, the biggest issue that people were worried about is, I'm going to be paying 100 rupees of premium. Am I really getting the value out of it. That the value mindset is there. And after I pay that 100 rupees, will I get the benefit or coverage at that point when I need it, which I don't know when it's going to be. So I actually do believe, and I've actually tested this in the US and in other Western markets. I've actually tested this with others in the industry, that if we were to demystify the product, which even today, I think we've done a brilliant job of mystifying what we sell as the product. But if we demystify that, number one, it will create more a level of trust in terms of what the customer is buying, educating them on what are the risks that they are insuring themselves against, what they can maybe self-insure themselves through prevention, etc., and what they should be covering themselves for. But if you do that right, number one, we will add the trust factor. Number two, I believe that we will be able to sell higher premium levels because there will be risks that they will become aware of that they are not getting covered for. And I think if you do, and I've tested this actually, I used to do a lot of work with Progressive, Geico, and I've actually tested this with executives to say, look, if you in fact did this, right, would you create a much more ability to talk about the risks that are not being covered? Now we've actually done this with AI and using Watson as an intelligence advisor, or we call it the virtual agent that we have deployed with clients like Geico and others, where in fact we have found that the conversion rates of customers going through those channels, the conversion rates have gone up by double-digit percentage then that are going through physical channels as well. Because if you make it conversational, and if you actually are educating the customer on risk factors, which again, technology exists today at a much affordable level to actually do that effectively at scale, that will actually enhance both the experience, it will build trust, and hopefully, over time, it will create higher levels of premium growth, because you can make customers more aware of the risks that they are not covering themselves against.
Let me Sumit just come in on the point that Sandip just mentioned. I think he mentions a very important point on how trust can, goes up with the use of technology. Now, I've seen so many customer testimonials on this new technology that we've used of, which just enhances transparency, where a customer is actually buying a policy and suddenly says, look, this is fantastic what you've taken me through. I feel comfortable.
Yeah.
I mean, verbatim almost as much. And of course in Hindi. But I'll buy one more. And we've had premiums go up because of this. So, and conversion pipelines, if you exactly what Sandeep says. So pretty much technology is helping get that trust and transparency in.
I
and we see the impact.
Yeah, because Tarun, the thought is what you importantly said is that if the person can see the form being filled, earlier it would used to be the form, physical form would come and he'd be like, "आप इधर नीचे X मारा है मैंने, आप sign करके मेरे को दे दो, मैं भर दूंगा, tension नहीं है." But here I have the time because I'm sitting at home and I'm not going to his office or he's not coming to mine. So let's fill it in detail. Another point from Sandip's that I want to take ahead, and I want to talk to Mr. Mathur because we were having this discussion yesterday itself about the need for simplifying and, like Sandip said, demystifying policies. So I know the IRDA recently came up also with this suggestion to all the life insurance companies that I think by 1st Jan 2021 they have to come up with offer the Saral Jeevan Bima policy. And Mr. Mathur and me were having this talk about the impact of how technology like AI, like what Sandip was saying, can help underwrite these simpler products. So Mr. Mathur, first you, and then I'll come to Mr. Tripathy also on the same thing.
Yeah, sure. No, thanks, Sumit. In fact, I'll say that technology and simplification, it goes hand in hand. When you actually leverage on technology, you have to be really simple. Because you can't actually sell complicated products online. You can't sell kind of jargon over email or whatever. So it has to be simple. And I think that is what the regulator has kind of mandated now, that there will be a simple product. It will be a templated product with kind of guidelines or maybe the border conditions being there in place. So I think once that is there, then obviously technology is going to play a very big role, because what we are intending, what the industry will do is actually get the big numbers. It will be a volume game. And because this country has got population which is kind of 1.3 billion or even more, actually, even if a small proportion, let's say if we're able to increase our penetration from, let's say currently it is just hovering around 3%, if that goes up to 5%, imagine the number of customers who are going to get in. And clearly insurance awareness is there to kind of, it's providing sort of tailwinds to the industry. So that coupled with the simplification which is there, coupled with the technology. So as a company, for example, now we are using predictive underwriting, we are using AI to see how we can actually have less number of underwriters or increasing the efficiency of underwriters to turn around more policies. So I think that is what is happening now using technology. I think most of the insurance companies, it's not about Canara, HSBC life insurance. I think this is happening across the industry, wherein all of us are using technology to kind of simplify things, to increase the efficiency. See, name of the game now is efficiency, sustainable saves. And how do you generate that? You invest in technology and then you get the benefits of that over a period of time. So I think that is going to be very, very important. I think regulator is also kind of giving nudge to the industry that, okay, simplify stuff and get more volumes in. So I think that's a good initiative from the regulator, and I'm glad that regulator is also thinking on these lines. So I think it will definitely help. But having said this, I think there are certain areas where still there will be dependence on kind of face-to-face interactions, on customer visiting medical centers. So today, while tele-MER is there, that you call up the customer, inquire about the health condition and do underwriting basis that. But in certain high-value policies, you simply can't do that. Or maybe for customers who are beyond a certain age. So I think technology will definitely help, but what will still be required is some enablement through which some of these challenges which the life insurance industry is facing today in terms of getting the medicals done, some of these things, I think there is distance to cover, but I'm very, very hopeful that with technology being in place, and technology can go to any extent. So it may also be possible that in some time medicals can also be done remotely. So I think technology doesn't have any limit is what I feel. The extent which we have seen in last 6 months, I think let's extrapolate, and maybe next 2 years could be very different future.
That's true. I'm next 2 years, next 6 months, next 1 year. I've stopped in all my panels. I used to first ask, can you see 5 years ahead? I've stopped ending my panels with that question because it's really tough to answer anymore. Mr. Tripathi, just wanted you to also weigh in on the same topic, and also just in your estimation, how's technology changing the landscape of the insurance sector? What are your thoughts on this?
So let's take the first question that you asked, Anuj, and then I'll come back to how technology is changing the landscape for life insurance. Firstly, I think there will be two kinds of products. Life insurance actually caters to the need of very broad population. But I think it will get broken into two parts. The kinds that existed before, I don't think it's going to go away. It will perhaps shrink. So the likes of ULIP will remain, or the participating designs that we sell will remain. However, there'll be higher proportion of simplified designs which are comparable. Earlier, the big issue was how do you compare X's product with Y's product, with different features, etc. But I think comparability and simplicity will go hand in hand to be aided by technology. So there are three or four products that people will be able to compare. For example, protection is something which is comparable. For every lakh of sum assured, how much do you have to pay for an age band? Very comparable, and that's why that market is growing quite rapidly. If you look at, for example, some of the aggregators and their business, our own business growing quite rapidly. The second one will be, where you could compare returns. So, typically non-par guaranteed designs, smaller tickets, larger tickets, but what is the return on which it could be compared? The third one, where again, you compare the returns in annuities, and globally you'll find annuities selling a lot on internet. So I think there'll be categories where it will become simplified and it will go on. While I agree that the regulator's intent is to simplify, it is also a fact that unfortunately in the price war that we are all in, a large part of the segment wasn't addressed. We were not going to people who are buying like 25 lakhs of sum assured, because if you go down there, it's something that you can't sell on internet. So typically we are going with assumptions where the mortality will be good, really the good guys, where the mortality will be good, where you could compete on price and you can. unfortunately, because that a very large set of people are being left out. So for example, if I have an income of 2 lakhs and I want to buy something from internet, there'll be very, very few providers who will sell me a policy. Now with this mandate, it becomes universal, it becomes available to everybody, and it is omni-channel, it is same price, and we have to go and sell. So I think the push is to increase the sum assured, and this is a step in that direction more than just trying to enable technologies. That's the first part. Again, I will say the future belongs to an amalgam of human beings with technology. I don't think the human is going to go away, because at the end of the day, it's a very mass market product designs where a large part of sale happens because of trust. So a large part of sale happens in banks because people trust banks, or happens through agents because people trust agents. So I think the enablement of current manual distribution with technology in terms of giving them solutions, the likes that Tarun was talking about, or enabling them or supporting them with artificial intelligence solutions so that they could offer the product in a manner which suits the customer, running propensities, all that will happen. But it looks like to me is the human being, the seller, will become a technology enabled super seller. But he is going to, or she is going to remain a seller for at least a few years. That's how I see it. So more technology, but it's not going to replace human beings completely out of the equation. For us, I think if you start to look at the value chain, Sumiit, of everything that happens in life insurance, and I'm sure it is true of all the companies and the representatives on this panel, starting from, how do you approach, how do you onboard, how do you issue, how do you then go and collect renewals, the propensity, how do you settle claims, how do you service the customer, how do you enable the customers in terms of sales service. If you look at the entire value chain, it is a combination of technology, of solutions, as well as intelligence. And I think technological solutions and artificial intelligence will come and get embedded in each of the parts of the value chain to make it more and more efficient, to make it more and more worthy, so that it is increasing the overall conversions, and it is making the job easier. I think that's where the future will go. It is a journey, I must say. I don't think anybody can say we have arrived and we are fully digital. I don't think it's going to happen. The world will keep running fast, and we'll have to do a lot of catch up. But I think collectively, as an organization and maybe as a race, we'll be more and more technologically enabled, facilitating our efficiencies to go up.
Right. Thank you for that, Mr. Tripathi. I'll come to the general insurance side. I'll start with Anamika, ma'am. One important point that Mr. Tripathi also spoke about was the idea of how we are, how we have to reach out to the masses. We have to, and what we were earlier talking also about, the need of simplification, so that the customer understands what he or she is buying. In health insurance, it's very niche, I would say, because what would want, what's the perfect product for me is different from my neighbors. It will be different from what my sister needs, what my brother needs, my family needs. So just your advice to this one is more specifically for consumers. So anybody who's listening in and they have to buy a health insurance policy, how would you weigh in on them, and how should they be buying health insurance? What are the right questions that need to be asked, especially in a time like this?
Okay, I will now act as maybe an internet-based advisor and advise the consumers that there are three segments. One is a young segment, which is about in the age of say 23, when typically you join a job, up to 30 years. Now this segment, I must tell you, we buy everything from the internet today, whether it's grocery or whether it's clothes, etc., medicines, everything. Even we have now, to the extent, have practiced what we call is telemedicine. We take opinion from doctors also on phone. Now, when it comes to buying insurance, I have seen this age group, because my daughter belongs to this age group, they are still not confident. They still feel they need someone who can come on a call. And why? There are two reasons. One is they're afraid that they don't know what product may suit them. So, and the other one is they're not sure of what happens when there is an actual claim. To my dear friends, I must advise you, go for a simple policy to begin with. Find out just 3 questions. Do they have enough hospitals, whoever is the provider, so that in case there is a claim, you know how to go, how to reach to them at the time of an emergency. What kind of network is there? How simple is the process of lodging a claim and consuming the claim services? And a simple policy to begin with will help you, even to understand the terminology, which Sandip mentioned, that we kind of mystify our products. Okay. Now we are all making an effort along with the regulator to simplify these big words like a pre-existing disease, or it means nothing. You can call us, any of us, and we'll explain how simple it could be. So buy a very simple product, which is called basic health plan. At the same time, I will strongly recommend for my young friends to buy a PA policy. Nobody knows when accident comes. You may avoid geriatric disorders at an early age in your life, but accident, God forbid, coming home from a party at late night, we don't know who's banging whose car or what happens at that point of time. So these 2 initially. Then we have a second segment, which is 30 years to 60 years, where you're basically employed, self-employed, you're earning a salary. And what happens at this time, you may think, oh, my company is providing me, or I have enough power of money at this time, I may postpone the decision of insurance. To this group, my advice will be tower your insurance policy, make a stack. You take a base policy depending on how much you are earning, but I would recommend look at one major disease, how much does it cost to the super specialty hospitals in your area. Take that as your base sum insure. On top of that, tower it with a critical illness. I will recommend this very, very strongly, even though you are covered with a group policy with your employer or some kind of a group that you have formed and purchased a policy. Critical illness is something which no employer is actually kind of covering. What is critical illness? If there is, say there are defined diseases, each company has their own definitions of such a number, and it is more as 11 to 19. It depends on how you have filed a product, means what is the shirt size I have cut out, which is the product basically. So this simple thing like a cancer or in our company, let me just tell you a little bit, we cover even major surgeries. So this is a lump sum amount you get. You have a base policy, it's fine, it covers hospitalization. Post-hospitalization, when you require regular intervention of medicines and other procedures, then this policy comes very handy. Last, again, I'll insist on a P. So you can tower this up like this. Last is when you are 60 years old. Soon we will be in that category, maybe a couple of years later. Many people wait and they say that, oh, when I retire, I will buy this policy. By that time, you're so insecure because most of us don't have pensions, and we'll say, now what to do, whether I will buy or not buy. So that buy or not buy is always a doubt, but you must buy. And that, of course, you'll pay a higher premium. And I don't know how the products are going to evolve. That's a real future in health. This kind of product that we have, be rest assured, my friends, products are bound to change. It might just take time. I will come to that later on somewhere maybe. But advice for you is, youngsters, do not hesitate. Do not wait. I keep telling this to my children. It costs you just about 2 big pizzas that you buy. That's the cost of a PA cover. It is just like a party tonight you have. That's the cost of a health cover. Please invest and give gifts to your people during Diwali as something like this. Then in India, we cannot do without a health cover because we are not in that bracket. Neither do we have a full-fledged cover being provided by the government. We all have limited sources of income, and it is always good in times of uncertainty to protect your whatever punji jisko hum bolte hain Hindi mein, whatever little funds that we have. It's always good to insure because that's your best friend in today's scenario.
Fantastic. Thank you for that. Ma'am, I want to come to Mahesh because what you said was really important, and just simplifying it was really simple, giving these simple calculations as just 2 pizzas, which is your PA cover. But Mahesh, one important point that she spoke about telemedicine, which was earlier also mentioned by the other panelists. Why I'm bringing in telemedicine is that the recently, again, regulations have made it mandatory to cover a number of illnesses, and telemedicine is now one of that's come under the cover. Is this a sign of the times? Is this where we are headed? More and more telemedicine coming in, more of the technology on that angle, helping people, again, for 2 things, because helping people becoming aware of this, and again, saving their time, saving them the trouble also of having to go sit at a doctor's clinic. Mahesh, you're on mute. Sorry. The most famous line that's
I think we are at an inflection point as far as technology usage is concerned. See, all of us had these technologies before. It's not that we all churned out in the lockdown all these mobile apps and all these accessible stuff, while some of us could have launched something in the lockdown, but all of us had most of these things. But the TINA factor never came in. People were comfortable doing what we're doing manually without actually migrating to these channels. So what COVID has done is the TINA factor of there's no alternative has helped adoption of these technologies really, really change. So that way there's been a tipping point. And I think that has extended to all kinds of services, whether ordering milk, whether ordering medicines, whether ordering food supplies. I think everybody has realized that, look, there's a better way of doing it or an alternate way of doing it. To give you some statistics today, at Kotak General Insurance, 90% of our payments are digital payments today. That figure was about 60 before the lockdown, So 93% of our policies are automated policy issuance without data entry in the company today, So some of these figures have reached real astronomical levels only because of the COVID situation. And then coming into telemedicine, that's exactly what happened. All of us have been in lockdown. You have an ailment. You can't go and visit your doctor because visiting a doctor was more risky than staying at home with the ailment. So going to a hospital, if you didn't have COVID, was a very risky proposition. So therefore, many people automatically migrated to some of these channels. And the usage of telemedicine, usage of e-pharma, grown absolutely disproportionately. My father is 83 years old. He lives in Chennai. He lives alone, though my brother is next door. But he's been ordering medicines online. It takes about a week to deliver, he says, but he says he's methodical, unlike his son. So he says, I can wait for a week and I'll get the medicine when I want to, So this is how migration of channels is happening, So I think this has taken the entire industry by storm. Across industry, this is happening. And all of us are thankful that we have had the technology in place ready for our customers to embrace it. So we only need to see whether this is a one-way street or like Demon, we'll go back to 26 lakh crore of currencies back in the market. So that's something we need to wait and watch. Demon, a lot of it was promised like this, but I looked at the RBI figures 2 days back for the currency. We are probably having the highest currency circulation in the country than ever before. So I think whether this is an irreversible trend or part of it will get reversed, that we need to answer. Even if part of it gets reversed, I think the average will be far higher than the earlier threshold levels. So we are seeing a tectonic shift, I would say, in some of these usages. And I think more and more products, more and more services will fall into this ambit. And we as companies need to embrace this and make sure that we provide all these facilities to our customers, whether it is telemedicine, whether it is data records, whether it is providing online advice for claim settlement or bots, or in fact, today the health insurance industry is fully settling claims on a digital basis. Everything is scanned. Nobody requests any documents physically. Everything is digitized today. And I think some of this will live beyond the COVID era. And as I said, we have reached an inflection point, and I think it's going to help all of us become more efficient. And also the asymmetry of information would go away, which will help in building the trust factor. Trust comes from you have the information, I don't have it, right? That's where the trust problem comes in. When the democratization of information happens, when there is asymmetry between the buyer and seller, whether it is selling standard products or listening to a video conversation of an expert rather than my agent talking. Just imagine if the underwriter of the company is actually giving a video of how the policy works. That will probably bring in far more weightage than any insurance agent can do. And these are things today we can do. Reach out direct to customers and solve the asymmetry problem. So I think it's a wonderful time to be in an industry like this. And I think it's only going to get bigger and better.
Fantastic. And you're very right, Mahesh, because what my sense is also the ease of just doing transactions, and again, not just insurance, but doing all kinds of transactions. Like you said, your father's buying medicines online. So just that, I'm hoping will make sure that this continues. But that is a question which, when we do the next roundtable on this in the next few months, or maybe in the next year, we will hope to get you back on, and you and I will talk about this point again. Sandip, and since we're talking about, say, telemedicine or just this use of technology, with technology comes data. And another so often used statement that it's become a cliche now is that data is the new oil. So that's another of these statements. But in that perspective, how can cognitive insurers utilize that data and technology so that they can, most importantly, increase the customer relevance and prepare for a future in which, maybe products are not a priority? What's your take on that?
So look, I touched on this, I think, in my opening as well. And I wouldn't say that we should ever get to products that are not a priority. I think the operative word I think that you used is, how do we become more relevant
Yes.
as a partner to our customers, right? It's more about relevance. And I think to that end, we will be we will be seeing the industry pivot more and more. And it's not to say that overall risk is going away. I mean, risk is always going to be there, which is what keeps this industry alive. But the way in which we perceive risk or manage risk, that is changing. So we are able to prevent certain risks from occurring, I think, because of data, and data allows us to do that. So the use of, for example, telematics in general insurance, and using IoT to ensure that we are identifying, some risks or calamities before they happen, and being able to fix them ahead of time. And this is more so, I would say, in general insurance, probably a lot more pronounced. But I'll also talk a little bit about how it's coming to life in life insurance or health insurance as well. But those are data sets now that are available to us. Now, the operative thing there is, how do we capture these data sets at that point of decision making? So I'll give you a very simple example. And I don't believe that this is fully insured at this point. But as IBM company, we actually manage the sensors and sensor data across the water infrastructure in Miami-Dade County in the US, in Florida State. Now, the whole reason why they've got sensors and so on, it's a very old infrastructure. And so what the sensors are looking for is any form of structural instability where alerts can be given for preventative maintenance of that infrastructure. Now, if you apply insurance to that, if in fact you are able to do that in time, where you are avoiding a water main break, it not only avoids sort of the damage that happens to the water infrastructure, but also other after effects that you can actually prevent. And if you can do that effectively, right, that sort of shifts the notion of managing that risk of loss to managing the risk of prevention. There are services, though, that become extremely relevant in terms of how you monitor those alerts and actually act on them before the calamity actually happens. And to a certain extent, Groupama, Italy, for example, we do a fair bit of work with them, where we have actually built for them this notion of an IoT-based insurance, right, which is a connected car insurance that they built out. Now, the reason they built it out is because they were trying to prevent fraud. And they are continuing to do that. So they are trying to sort of use it for better claims adjudication and making sure that fraud is being prevented. But the platform that they've now built, they are now co-marketing that with us in markets where they are not selling insurance. So there are these new models that are evolving that start to allow you to build, these platforms and scale them in other parts that could be more relevant. So it's sort of creating markets or creating revenue pools based on technology assets and others investments that you're doing. Another one that I'll quickly touch on, and this gets into the life side of things, is a company called Malteser. Malteser is mostly in evacuations. They do emergency evacuations and so on. So the Malteser and it's a German company. They have worked with us to create these sensor-based old age homes. So they've created connected homes for senior citizens, and where there are sensors across the house. They're non-invasive sensors that actually provide alerts based on certain patterns. So if someone hasn't, gotten out of the bed for a long time, or if they're not moving around the house too often, they actually send a nurse practitioner to look up on them. Now, the initial buyers of this service were the caretakers. So children who were trying to take care of, parents and so on and so forth. So they were actually buying this service. Today, one of the biggest consumers of this service is actually insurance companies who have insured the lives of these senior citizens, right? So this is another area where it is giving them a better risk management of this pool that has been insured. And obviously, because of the nature of these life insurance policies, they are covered for life. And it gives them a better way to manage that risk. So insurance companies are buying this service. And Malteser has almost created a whole new service business out of this, with insurers as their customers. And this is one of the things which, when in my past role, when I used to go around talking to, several of our insurance clients, I was actually building insurance companies earlier when I was doing international insurance. This is one of the things that, was very interesting to see. Where are these white spaces being created for services that are going to become more and more relevant as this whole paradigm of insurance starts to change? And can we as insurance companies start to build these out at scale, either as platforms that can benefit, the industry as a whole? Just something to think about, because technology and data now is enabling us to do this and create these new, I call them value pools or revenue pools that we can move forward with.
Fantastic. Thank you, Sandip. And yeah, those are some really important, because what I really think, and we haven't spoken about it today, but I'm just going to head into closing comments. So if anybody wants to include that, is the idea of how insurance is using, and I think more of health insurance is using, like, maybe a smartwatch, a gadget that could be, I don't know, your Fitbit or whatever, the Apple Watch, to take in the statistics, the data of a person. So if you're a regular exerciser, it's being recorded by a watch, and that can be used somewhere to reduce premiums or offer better plans. So like I said, we're running out of time, so I will be coming to the panel for closing comments. Just wanted to start with Mr. Tripathy, sir. Just your thoughts now for the way ahead for the life insurance sector in India. Just an overall, your thoughts.
I continue to remain extremely optimistic about life insurance in India for a variety of reasons. A, under-penetrated, very large segment. B, life insurance companies have a very wide spectrum of offering, covering, savings, traditional savings, equity-linked savings, protection business, health, retirement, you name it. And we have the license to actually cover that. Some part is penetrated, a large part is still underexplored. So, it continues. And I think COVID has been a muscle builder in tough times. Actually, you develop the strength that you actually leverage when times get better. So definitely the push on technology, product solutions, market understanding, awareness, all that has got a leg up because of COVID. And I personally think that from here on, it will all look up and, really bright few decades ahead of us.
Sorry, yeah, fantastic. Mr. Mathur, just your thoughts, same question. So if you and I was doing this roundtable conference exactly a year from now, what would we be talking about? Would you care to take a guess?
Right. No, so I'll just stop it to what Prashant said. I think extremely bullish. And I think in 12 months time, you will see a different level of insurance industry. And I must say, thanks to the government initiatives also, like what PM announced 5 years back, Pradhan Mantri Jeevan Jyoti Bima Yojana. a very small ticket kind of insurance, but I think that has created awareness. That coupled with what we are going to see from January onwards in terms of a templated simple product, I think will take insurance to a different level. And let me also kind of mention this, that insurance is the only vehicle which provides you guaranteed returns for 15 to 20 years. Any other segment you take, all these are short-term saving options. So in an era where the interest rates are declining and where we know that the lifestyle is kind of improving and we will have needs for future, I think insurance is one sector which is very, very promising, and customers should look at it. Not just earlier, there were days when people used to buy insurance for tax savings. That time is gone. I think the time now is in terms of savings, in terms of how to secure your future, how to get protected. And I think there's very bright future. And just to add, I'll say that data and analytics is going to play a very, very crucial role in this. And I think it's going to be a very different world in next 12 to 24 months.
Fantastic. Tarun, coming to you, I want to ask you a little different question. So, Ms. Rashtrawar spoke about guiding the consumer to buy health insurance. And I feel that maybe if you could just weigh in and just share your thoughts on guiding a consumer to buy life insurance. Because again, I've said this earlier also, it's not that India is just uninsured, but India is underinsured. So we'll have a sum assured, but it'll be, I don't know, 1 lakh or 25,000, which I might have taken just out of college to get, a tax benefit. So just if you could weigh in on that and just share your thoughts.
I think fundamentally, the way insurance is being sold is going to change, I feel. The fact that all of us agree that there'll be a component of face-to-face will always be there, but it was almost like 100%. Now it is going to be a combination of physical, face-to-face, and digital. So that's the one thing I'd say that will bring us closer to customers. I see customers also wanting to, buy things in a more transparent fashion. So if the insurance sector is able to take it like that, I'm not going to say we're going to grow so much and all of that. But if you're able to use technology to be able to get customers to feel more trusted, to be feeling that you're doing something which is transparent in nature, which is simple in nature, we will end up exploiting that. So that is going to make a difference. Insurance from currently a hard push product, I'm sensing is now becoming a soft nudge product.
Yes.
Right. So that itself will get customers, because see, you just imagine, if you just try to imagine how distributor runs after a life to be insured, right? Today, you're really chasing somebody. It's almost like a cat and mouse game happening. So instead of that, we do expect that we're already seeing that is getting to be a little bit more top end on the customer list. That is going to make a difference, and this is what is going to help us move ahead. And data is going to make a difference. Whether we will be able to achieve our objective will depend on how we use data. Currently, we have been using data only for basics like fraud prevention, some basic underwriting, and more on the back end. I think the more and more we bring it upfront, will we be able to get customers to come in? Can we do profiling? Can we be able to cherry pick that this X product is what Sumiit is going to buy and this Y is what, let's say, Anamika is going to buy? And that is what is going to decide between success and failure. And all these things will decide how the customer takes it. So there is, one can't be a soothsayer and say that this is going to take off. The ones who are going to be able to exploit it are the ones who are going to be the winners.
Fantastic. Yeah, that's a very valid point there. Mahesh, coming to you for closing comments. Also, I would just like you to comment on one thing, Mahesh, that we were speaking earlier, you and I, and about the fact that when you look at the scale of India, we're 1.3 billion people, that in effect, in a way, is the market. But for the market to scale, there has to be innovation also at that scale. So just your thoughts on that, the hurdles maybe that you think, or some of the key points that need to be addressed for that.
Yeah, so I'll probably answer your question in 3 parts. Hopefully I won't take too much of time. I think as far as GI industry participants go, I think honestly, we have a long way to go in terms of respecting data first, asking for data first. Here in 2020, we are haggling with the regulator to make KYC mandatory. We must be kidding ourselves that we have been running this industry for so long without KYC and paying reasonably attractive commissions to our intermediaries. I think a lot of it has got to do our own naivety, I would say, as insurers. I think the time has come for us to wake up. Jago, insurance company, Jago. Rather than Jago Grahak, as far as data goes, we have to respect data. We have to believe that we need to have data with us, good quality data. So I think that's first, as an insurance company, each of us have to have data. Secondly, what about the data? We settle about, we issue about 18 crore policies and settle probably about maybe 13, 14 crore claims, 4 crore claims. What are we doing with all this data? At the industry level, look at how the landscape of lending has changed in India. I was a lender, I was a banker turned insurer. 2007-8 is a landmark in India as far as credit bureaus goes. Post Lehman Brothers crisis, the entire unsecured payment industry, unsecured loan industry went through a huge crisis because of leverage. We learned from that and put in credit bureaus. And today a credit score is extremely the basic information you collect before you lend. So what are we all insurers doing with so much of data? Can't we come up with an insurance score, right, for customers, right? If a customer is repeatedly defrauding companies, or an agent is defrauding companies, or a hospital is defrauding companies, we are letting them do it, right? Because we have inertia, we are reluctant to pool the data and share data and make it useful for all of us. So I think we are a little bit of generation behind in general insurance. Life, I think, started something like that. So I think they are probably ahead. I don't know what's the status of the project, but GI industry has actually been pathetically lagging behind. So we are busy garnering market share and losing money, rather than doing the intelligent things which can help all of us benefit customers. Because if my loss ratio goes down, I'm going to offer better premiums to customers, right? End of the day, customer benefits, shareholder benefits, everybody benefits. So I think we need to wake up out of our inertia, stop getting naive, and become smart in terms of collecting data. Blockchain should be implemented at the industry level, rather than each of us trying to do it on our paltry data, right? We should probably make it an industry-wide initiative and collect the data, pool the data, so that we are able to use data to help build the ecosystem of insurance. So I would be very happy in 24 months' time if Sumiit has an insurance score and he approaches me saying that my insurance score is so much, how much are you going to give me as premium? You know, that's a sensible discussion to have, rather than saying company A is giving so much a premium, so let me undercut and pick up that business. You know, that's like, that should be passé, you know. No, so that's as far as data goes.
Yes. No, it totally makes sense, because I mean they have the CIBIL score for when you want to take a loan, and the banks or lenders are helping you reduce the interest, or they know how much of a risk they're taking. So why not for health? Why not for insurance? That's a very great point, Mahesh. Thank you for bringing that up. Anamika, ma'am, coming to you now for your closing thoughts on this also. And another point that I would like to just bring up, and maybe if you would like to comment on it, is what happens is insurance is also based a lot on estimates, on data. That's how you're placing your policies. You're kind of assuming the number of claims you'll get, etc., etc. But when an illness like something like COVID-19 comes in, it just throws all those calculations for a toss. So it's all out of the window. So just wondering your thoughts on that as you share your closing comments.
On the closing comments, I must share with all my young friends who are observing this today, please join an insurance company. This industry has a great future. It's so interesting that every day we are doing new things. I agree our data may not be the best, but we do have data. I think we are IBM case study. I don't know if Sandip is, I'm sure Sandip is aware. We are the first company who started doing claim assessment based on AI. And yesterday I was talking to one of the largest NBFCs in the country, and I said, if you're in Timbuktu and if you can have some internet connection, you can actually insure your policy yourself, and you can settle a claim also if something happens to your vehicle if you've taken it that high. So we have actually translated data into meaningful claim settlement. One, underwriting. I think the future, I don't know next year if it is possible, but I'm very hopeful. Before I retire, hopefully, I think the brochure product may not be what everyone requires. There will be a templated product which anybody can buy off the shelf. With data that we are now gathering, I think that, we are talking so much of wellness, fitness, all these data will have to sit somewhere, and the actuaries would have to come up with product which suits you. I am a diabetic patient. If I maintain my HbA1c level at 6.5 over 2 years, my rating, obviously, I don't want to pay. These are my thoughts. Another thing which I think would happen very quickly, maybe I hope our sandbox proposals are through this time. I think we have suggested something completely out of the way in terms of our proposals. Number 4 point is what I would talk about again with data, as we say, that if I join insurance, like any of you who are 20s and in up to 30s, say, or whatever, 35, you joined a plan today and you really didn't have any claim for 60. Should you be charged with the person who joined at 60? So this differentiation of pricing, I think we would be in a position maybe after some, because that will require some kind of a very difficult calculation for actuaries, because in a life, they do anyway have mortality rates, they have other factors built over a period of time, which we now are now getting onto that journey and embarking on a new journey, how price rating will vary, taking the help of data. So data has been consumed. I must share, but of course I couldn't use much. We have a dynamic pricing engine, which takes care of credit bureau rating. It takes care of the policies you have. We did experiment with it. It's a successful experiment. However, we have not been able to do a full-blown launch with this. So data is being used. Yes, the finer the data, better it will be for anyone to use. Vehicle data is more or less complete with any insurance company. Hospital data is complete with most insurance company. What we probably lack is the phone number of the person and the PIN code, probably that will help. With this, let me assure you that innovation is the game, yes, but the fundamentals will still remain the same in insurance. The way we saw, what did COVID do? We all had digital platforms, assets, applications, all were ready. Otherwise, you think on 22nd March, was announced just lockdown and we would have stopped business the next day. It didn't happen. It's just that it nudged us to use them more and refine them better in the days to come. So 3 points that my closing comments are. One is data is available to an extent which we can make some meaningful business modeling. Number 1. Number 2, digital assets. I think every general insurance company was prepared, not knowing that COVID is going to come, but they had assets which they definitely used and using it even now, and more refinement will be there in future. Number 3, will a brochure product drive higher end innovation? No, but is it required for penetration? Yes. So they will remain for penetration. But if I want customized solution for my customers, I probably will have to mix up a lot more actuarial science to do this. And the last question which you asked based on what I would talk about in terms of what are the fine points you would want me to say?
Just the thought about how, all the data and all the calculations.
Yeah. That's what I said. The calculation and data, we will see a little bit of a journey in that, but we have all embarked and we are on a journey. So it is all evolution. Evolve karega. And 0.97 say, I'm very hopeful when we speak next year. I am quite confident there will be an increase. And we are very positive with what has happened. And it is one of the finest industry to be in at this point of time. Of course, there's a lot of complications in getting your COR right, in getting your profits right, but that's the fun of it. Every industry has its own challenges, so does this. Thank you very much for this.
Thank you so much, ma'am. Coming to Sandip, just for your closing comments and also to sum up, but just one point, I know we've totally run out of time, so we can't get into this, but just want to leave a thought with the panelists and the audiences. In August 15, the Prime Minister spoke about the National Digital Health Mission, which was more on the health sector, but maybe that is something that maybe the insurance industry could use also to get access. I mean, I know it's a mega topic. We can't discuss it today. I'm hoping on the next meeting we will definitely discuss this. But with that, I want to hand it over to Sandip for his closing comments and just summing up our panel discussion today. Over to you.
I can't top any of the closing comments that the panelists have made. So I'm going to try and sum it up, because I think there's some nuggets that came through the discussion. I mean, clearly love the optimism for the industry and the growth rates that I think people are seeing and are continuing to feel confident about. So I think I love that. Love the comment around health being the new motor. And we need to sort of go after unique customers for that. I am actually a big believer in that. Have run businesses in that space, and I think there's a ton that we can do. The whole focus on technology, and I think there were some excellent points made, that technology actually can help drive trust and transparency that will actually help us improve premiums in the industry, actually bring in more people. And I loved what Tarun said, that it's more than a hard push, it's getting to a soft nudge. So I think if we can get from soft nudge to a pull, it will do wonders for the industry. And then the other point that several folks made around technology is all about having it go hand in hand with simplification, simplicity, comparability, which it allows us to do, predictive underwriting, and dynamic pricing. I think all of these are very tightly interlinked, and it actually helps us drive this digital interaction, selling, creating value for consumers, right, and customers in terms of how we sell. And then and this whole piece will actually create migration of channels. I think that was the other point that was very effective, because those new channels will hopefully create more areas of growth and others, including creation of this service economy, which should create new revenue and profit pools for the industry. And I'll close out underscoring the value of data and analytics, which was universally, I think, acknowledged by everyone. But loved what Mahesh said about creating an insurance score. I'm actually a big believer that even when we think about commercial lines insurance, I think there is value to starting to create some form of industry scores that we can actually build out, particularly as we get into new risk pools such as cyber insurance, etc. I think there's a ton to do in that space. So loved the dialogue. I want to just acknowledge and give a heartfelt thank you to all my fellow panelists. I think some wonderful comments and some wonderful ideas that we can use to really move the industry to the next level. And clearly the time for insurance is here and now, and we should capitalize on it. So with that, Sumiit, back to you, and thank you again earnestly to all the panelists for participating in this great event. Thank you, Sumiit.
Thank you so much, Mr. Rashtrawar. Thank you, Mr. Tripathi. Thank you, Mahesh. Thank you, Tarun. Thank you, Mr. Mathur. And thank you, Sandip. This was a very insightful session on the insurance industry and what the way ahead looks for it. It's part of the Economic Times and IBM's Reshape Tomorrow. We have a couple of more roundtable discussions coming up. So do stay tuned to our social media channels so that you will be updated and aware of when the next one happens. Thank you so much for watching. And again, heartfelt thank you to all the panelists. Thank you for your time and your insights. Thank you so much.
Thank you.